Josh Berelowitz from JP Morgan, welcome to the Alternatives Symposium.
Thank you.
Can you explain the basic premise of the global macro strategy?
Yeah, sure. So what we're trying to do in the global macro strategies is deliver strong risk-adjusted returns in a range of different market environments. And to do this, we're really focusing on the macro, trying to identify the most important themes, either cyclical or secular, that are going to drive markets over the medium term. In how we implement these, we're really focused. We draw on a broad range of different investment opportunities, and we're also very flexible and dynamic. So we'll adapt the portfolio quickly and significantly to a changing macro and market environment.
And can you explain the importance of correlation within a multi-asset strategy like yours?
Yeah, of course. So the way we think about correlation and how to implement that, I think is quite different to other multi-asset managers. Traditionally, multi-asset managers rely on a negative correlation between stocks and bonds. And we think that that's often in place, but not necessarily. And what determines that really is the macro environment. If you have markets focused on risks around growth, then typically stocks and bonds move in opposite directions. A growth shock might see stocks fall on negative revenue expectations and bonds rise as central banks are likely to respond to weaker growth. However, if you've got concerns more around higher inflation and tighter policy, stocks and bonds typically move together. So for us, we're making that judgment. And what we've seen this year has been a backdrop much more of higher inflation and tighter policy rather than of growth scares. As a consequence, bonds haven't been particularly diversifying in a multi-asset portfolio, and we've been looking much more around currency, the likes of the yen and the dollar, and also favoring option protection in equity.
What does your underlying investment universe look like?
It's really very broad. We look at stocks, bonds, currencies, both in cash and also using a range of derivatives, so futures, forwards, options, swaps, etc. While we have a very broad range of different investments we can draw upon, we're really very focused, and we typically have 100 or fewer investments in the portfolio. What we're ultimately trying to do is identify these key macro trends and pick the best investment opportunities to implement them from this very broad range of investment opportunities.
Josh Berelowitz, thank you.
Thank you very much.